All righty, welcome to Commercial Real Estate Today. Grateful that you are with us once again. I've got a wonderful friend to introduce you to today from Ricci Insurance Group, Whitney Ricci.
Hi.
Welcome to the program. Happy to have you here.
Thanks so much, Wally. Thank you very much.
Insurance, insurance, insurance. You know, if there's three things that always tend to aggravate my life,
What a warm welcome.
it is the airlines, cell phone providers, and insurance. It just feels so often so complex and so big a part of our lives, both in terms of, yes, protecting us, but also in expanse and just figuring out, what do I need? And do I have what I need when I need it? And am I buying things I don't need when I don't need it? So in terms of risk, in your experience, is that risk usually employee-related injury, or is it from come and go traffic? So if I have a business where I never have anyone come in from outside, it's only the employee, is it still important I have that coverage?
Well, believe it or not, a great deal of the claims that we see on the general liability side for commercial property owners are not necessarily I don't want to say like invited guests, but sometimes it's passerbys. It's sometimes that are, if you're a landlord, it's not your tenants, it's people that are visiting your tenants, the things that that happen in the parking lot, type of thing. So when we're talking about commercial real estate, most of those clients are the property owner and the landlord, and usually in the capacity of being the landlord, they don't have employees. If there is a business owner that has concern for their employees, that would be when the workers' compensation insurance kicks in. And that's something, depending on your industry, if you're construction related, you need to carry that with your first employee. And if you're anything that's non-construction, it's the fourth employee when you're required by law to carry it. But we see a lot of folks that will carry it sooner because, they just want to be protected. They want to make sure if anything happens to their people that they're going to be taken care of and that their business will be secure.
Let's dig a little deeper on the commercial liability. If I'm the building owner, I absolutely see that I need it. If I'm the owner-occupant, I absolutely see that I need it. What if my business is a tenant inside of that commercial building? How do I protect myself there?
So usually your landlord would require you to carry general liability insurance and list the landlord as an additional insured. We're seeing, as the lawsuits have gone up, we're seeing stricter and stricter landlord requirements where they'll want the specific location to be listed, where they'll want the name of the building owner and also possibly the property management company, just to make sure that this isn't a scenario where somebody buys a policy, pays monthly, pays one time, and the policy lapses. Because the tenant's liability insurance is something that stands in between the landlord and a potential lawsuit. It's an extra layer of protection.
An additional insured. That bugaboo has come up with us routinely in the commercial inspection business, where a customer of ours, they may be a customer of ours for a day when you really get down to it, where we're actually on site. The property owner may say, we want to be named as an additional insured. Tell me if I'm wrong on this. I have the perception that many people believe that being named as an additional insured gives them some special right or protection.
So the main thing that people are trying to accomplish is to be notified if the policy is no longer going to be in force. It doesn't mean that you're an additional named insured on the policy where that they have every bit as right to file a claim as the policy holder. And that's a pretty common misconception that we see. But we are seeing more and more of it, especially with our contractor clients, and not just being named as an additional insured. They want particular policy contract language. And boy, some of the bigger builders, the national builders, they want things. They want you to rewrite the policy contract. And it's like, okay, how can we, get a special exception and add this overriding endorsement so it still can meet, this box that they can check, pass go and be able to have the business relationship.
We see that routinely in our own case in particular, where we may have people in 20 or 30 different builders during the course of the year, completely respecting they want validation that there is insurance in place. But the additional insured gets a bit cumbersome. It
gets expensive when there are certain fields that you see. And we get to see a lot. One of my favorite parts of my job as an insurance agent is, you get to peek under the hood of a lot of different industries, and you get to learn so many very, very interesting things. And I'm hyper aware when we see the books of particular industries that have to pay a lot in insurance because they get sued a lot, and their product doesn't really cost a lot. Yeah. It's very painful, and it's hard to make that kind of thing profitable. And we're seeing a shift in business owners where for many years you kind of feel like you have to say yes to all business because you're new. And we're seeing some business owners realize that, no, I can't make these margins work. If you need me to carry these extra, all these extra policies or, and charge that pre-negotiated really low rate, it's just not going to work. So
they're in conflict for sure. Let's talk about building contents. For sure, if a business owns a building or a landlord of a building, they're in deep conversation with you of protecting the building against peril, but the contents. How do you advise people to assure that they've got the right amount for contents, yet they're not covering things that they don't need to expense-wise?
This might surprise you a little bit, my answer here. So as the insurance agent, my answer across the board is always, we want you to have replacement costs because we want you to get to a pre-loss condition. If you have a claim, that's what we sell insurance, that's what we want to deliver on. Now, that being said, my personal philosophy on risk, on how I insure, my properties and my, if there is a limit that you can see, my worst case scenario is this, the contents coverage is something that I'll have the conversation with clients. You want to go back and forth and see, could you get back up to an acceptable standard for a lesser amount? Now, we need to be careful about co-insurance. Co-insurance is if you're underinsured, you could potentially have only a portion of your claim paid out. So, we do need to be careful about those sorts of things. But in a lot of cases, people tend to be more comfortable that they could go to IKEA and replace the office furniture that they have if they have that claim. And they feel pretty comfortable that, statistically speaking, it's pretty low risk, for that.
I'm told by the studio owner you're sitting in an IKEA chair.
That's the thing to do, and we'll see that a lot of times. We work with a lot of real estate investors that have portfolios of homes, and they'll take a similar approach on the single family and the multifamily homes that they insure. If they know that their worst case scenario is this dollar finite amount that they've got into it, and they know with their resources that they could get back up to rental standard, as long as we, when we have the claim, they're not, Whitney, you should have sold me more, because hey, if I sell you more, I get paid more. But I can get on board with a manageable amount of self-insuring a portion of a business owner or real estate investor's risk.
Flood insurance, particularly in Florida, flood insurance for a commercial building owner. You generally an always yes, an always no, or only if it's mandatory?
It depends, and that's another thing. Flood insurance kind of falls into that category. I carry it on all of my properties because it's Florida. You look at a map and, you see some of the things that happen. My in-laws live in Denver, which is the mile-high city, and they had crazy flooding in Denver a few years ago. So you can't just say, I'm not in a flood zone, or my area is pretty high. And in my opinion, flood insurance is very affordable. You can get it on a rider in a lot of cases if you've got a residential portfolio for a couple $100 a property. And I think that that's a good deal. But for a business owner, again, you go back to, if you're not in a, and I should add in here my cover yourself. My answer is, if you're concerned about flood insurance, you should buy flood insurance.
There you go. You asked
you
the
should
question,
buy flood insurance.
One of my bugaboos on that subject is, and you deal with a lot of real estate agents, I deal with a lot of real estate agents, say the home is not in a flood zone. So it is in a flood zone.
Whole state of
the
Florida,
question is, which flood zone is it in?
Right.
Is it mandatory insurance or is it optional?
Right. Yeah. And people would be very surprised. The statistics are, and it goes year by year, but 1 in 4 or 1 in 5 flood claims are in those low-risk flood zones, which are what most of Jacksonville is in.
More likely to be destroyed by flood than fire in Florida.
80 times more likely.
Crazy.
Crazy. And we've seen, we have fire claims frequently. So and we have flood claims that are not covered. So, we have that conversation. It is a real risk. And it just depends on your comfort level of risk and what resources you have. If you are not insured, to come out of your own pocket and be able to make yourself whole. Does that make sense for you to exchange the premium savings for taking on that additional risk?
Yes. So you've got people protected, risk by the building, risk from the lawyers, risk from the flood, risk of damage or destruction of the content from some peril. More and more with every passing year, businesses are subject to what you might term, or I might term, behavioral risk.
Yeah, we call it a moral hazard.
Moral hazard. whether it's discriminatory or harassment or something related to behavior that occurs in or on the property. What things are available to protect the honest and legitimate? That's what we're attempting to do.
Right.
Attempt the honest and legitimate conduct of business against that peril that may occur through the behavior or even the accusation of behavior by an employee or that occurred on site. How do you protect that?
So there's a type of insurance that's called Employers Practices and Liability Insurance, EPLI. It'll be called for short. And boy, we had a tough time this year because of COVID. A lot of the carriers stopped writing it because it was just this huge unknown. But generally speaking, that's the insurance that's going to protect a business owner against claims by employees or former employees for discrimination, sexual harassment, wrongful termination.
Would that protect against a claim from a customer or a passerby, so to speak?
Employers' practices liability insurance.
So the
would
E
not.
is the operative.
Yeah, there are some provisions, and it's contract by contract to look at under general liability that can pay for some of those things. But you hit the nail right on the head. If you do the work on the front end, the businesses that we work with that have the meetings, that have an HR department that keeps up on these things, and even I've got a client that does a great once a year. They have it scheduled to just walk their property with their eyes open and look for things like, is that root now sticking up more than it was a couple years ago? Because it's so easy to get in a grind.
Well, the root, as an example, it grew slow.
Right.
It didn't happen overnight.
But when you see it day by day by day,
you tend not to notice.
Yeah.
Bring in fresh eyes. Fresh eyes are so valuable in every aspect of business, most aspects of our lives. Fresh eyes, I go to my skin doctor. Look at my skin. It's like, yes, you're okay.
That's
you don't notice.
That's been one of the fun things in this season of my business. We've brought on a lot of new people over the last year, and it's been fun to bring people in. We've shifted. The majority of people that we're hiring now do not have an insurance background. So it's been really fun to hear what we don't know, coming in on fresh eyes and where we're looking at every single thing, why do we do this way? And, the opportunity to change things and get that constant feedback. I think that this last year has done that for a lot of businesses. You've had the opportunity to look inward. Although, if I hear one more person talk about this great pause of 2020, I don't know who these people were. They learned to play the guitar and learned another language. I feel like we've been in fire drill mode for 18 months. Or not 18 months. I guess it's been exactly 12 months.
Yeah, COVID's been good to us. I feel very fortunate in that regard. Real estate has done immensely
It's all
well.
the people coming. Can you believe it?
Yeah,
I mean, it's
grateful.
It's one of those things you hear about. All the people from California, all the people from New York, want to come and move to Florida. The weather is nice. We're open for business. We have. I think that I guess I can't quote this in any official capacity, but from an observing standpoint, I think that just about everybody that I know in Florida that wants a vaccine has been able to get one, regardless of their age, which is wonderful. It's giving people, if you have the option to do what you want to do to feel comfortable, then we can get. I'm going to sound optimistic, but everything back to normal.
A new
we'll
normal.
Make the numbers go down.
I believe normal will be different than it was in the past, but it will be a new and comfortable and acceptable normal where we can all safely and comfortably do the things we do for fun, do the things we do for business, and move forward. Knowing that you have a very, very large real estate investor base, as do we, for that real estate investor, when does that transition, or is there a transition from I have one rental property, now I have 10, now I have 100, now I have 1,000, where we go from sort of individual coverages to portfolio type coverages? How does that happen, or does that happen?
So there are a lot of factors that go into that. The biggest one is the location of the portfolio. If it's in another part of the state that's not Northeast Florida, a lot of times we can make financial sense to switch them to a portfolio product sooner. Now I'm talking about for the long-term hold, not when it's undergoing any type of fix and flip. I'll circle back to that.
Okay.
No one would love it more than me if it was a lower premium and better coverage and all that's on a single policy. In Northeast Florida, unfortunately, it's still not. We've had some market trends that are driving up the base premium.
Why
for
does it
individual.
vary, even within an individual state, that state being Florida, almost county to county, there's a difference in if I can get a portfolio type
No, you can get it.
Oh, okay.
It's just what the premium will be.
Gotcha.
So specifically in Northeast Florida, the individual policies for a single rental property are still considerably less in Northeast Florida than that same property would be on a master policy. Unless
That fascinates me. I would have guessed South Florida would have been just the opposite.
Well, so the policies, there are fewer carriers that are writing business in South Florida. And so if we're comparing Lloyd's of London with Lloyd's of London, I mean, I'm speaking very generally,
Sure.
Then we could be at a lower rate on a portfolio than we would be on a standalone policy. We might be able to get down to 60, 70 cent rate where we'd be still like maybe closer to $1 on a standalone policy down there. Up here, we're I hate to say with the rate increases that we've been seeing over the last 6 months, and we're getting nailed in Northeast Florida because we've been in this little bubble where we have not been affected. You know, I'm talking to my agent friends in South Florida, and their customers are just so used to this. They're like, you know, oh, here we go again. I got a renewal offer. I better be grateful and I better pay it. You know, they don't even, it doesn't even cross their mind that I better shop all around and see if I can save money. They're grateful that they have insurance. And I don't mean to get into, you know, Debbie Downer zone, but
No.
it's the market that we're in right now. So there may be a time over the next year where the individual policies in Northeast Florida raise to the point where we are able to provide a cost savings by switching to a portfolio product. And boy, I tell you, we love those products because it's one bill, it's all on one policy. The likelihood for somebody with 100 houses to miss paying one house, which of course is going to be the one that burns down. That's always the way, you know, claims happen in the gray. That's one of my big beliefs. But we're not quite there yet, unless you are somebody that has a revolving inventory. And if you have a revolving inventory where you're doing fix and flips, or maybe even you're buying, you know, a chunk of properties that have tenants in them and you're going to sell them before, you know, 6 months or 8 months or something like that, anything kind of funky, when you get to 5, or 2 or 3 if they're higher value properties, we have a great master policy for that. And that's one of our most recommended, or most referred rather, within the real estate market. That's our hot product.
So what's that general benchmark then? Say 5 properties basically?
That's to be eligible, yeah. If you're only a onesie twosie, we can write you a onesie twosie, you know, policy. But there's just not that much competition for a onesie twosie policy. We're an industry that makes their profits in renewals,
right.
And that's inherently a product that's designed not to renew. You're going to sell, you know.
So if I'm a real estate investor investing in single family residential, and my portfolio is usually between, let's say, 20 and 50, but the addresses are often in flux. Will that master policy care to that?
You
so
would
that's
love
my right way to go?
You would love that. You would send me a thank you card for talking to you about
Because it's simpler, because it's less expensive.
Oh, it's
Why
so
is
dreamy.
that inventory?
It's so dreamy. Yes,
dreamy.
you heard me say dreamy talking about an insurance policy. Okay, so the policy contract language is better than you get on a standalone policy. Right now, the premiums are about the same, all things equal, but our clients end up saving because there's no minimum earned period, and they pay monthly for whatever is on the policy that month. And it's an annual policy. So a lot of times our real estate investors use non-traditional financing, and they're going to require an annual policy sometimes, which if you're somebody that's doing, you know, 5, 6, 7 properties at a time, it could crush your deal if you have to buy an annual policy that's fully earned to meet your lender's requirements. So it frees up cash and lets our clients get more deals. And the ease of use, the client gets a log on information to a portal. So if they want to get insurance at 5:30 on a Friday on something that came through in the 11th hour, I'm telling you, like in 30 seconds, they can log on, issue insurance. It even saves, if they use hard money lenders, they can save all their lenders in there. They boom, click, add them, issue it. Policies on there. They don't even have to make a payment. It's billed at the end of the month for whatever they've got on there.
Does the investor have their own individual dashboard, or you're managing that piece for them?
They have their own dashboard.
Wow.
Yeah, and we have an agent view of all of it. And the thing that's great is pretty much any curveball that you see an agent face that's like kind of weird, like I want to buy a house that's condemned, or I want to buy a house with Wally, but just for this one deal, so we're going to create a one-off LLC. Can I put that on there? Yes. I'm taking over a land trust for somebody else. We're going to reassign the beneficiary. Can I put that on there? Yes. I want to do... I came across something that's like outside my normal scope of work. You may need to communicate with us. If you have always done single family and now you're going to buy 10 mobile homes, we need to get mobile home classes turned on for you. But all of those weird...
So as long as I can clearly articulate it and legally describe it, you can insure it in this...
On the master plan, yeah.
That's nice.
Yeah, it's really nice. And to me, I feel like, those are some of my most valuable clients. And the alternative, which are the individual policies, which we sell the heck out of because, you grow with who you know. But, if you've got 50 or 80 properties at a given time, you deserve to have a product that says yes, that lets you do the things you need to do easily. And it's also... like I mentioned, the coverage is better. It frees up the cash flow. It's got the AM Best A rating. It's got the annual policy. It's got the, you don't have to call and wait on the hold. I mean, my team works so hard, but I'm here talking to you right now. You can't get me at the office, so you don't have that wait of where you need
but
to.
I could have my people talk to your people, and we'll get.
I
think that's how we got here.
That is how we got here.
So, talk to me about an umbrella. What is an umbrella? Why would I want an umbrella, or when does it make sense to assure that I have an umbrella?
So an umbrella policy, by nature, if you picture an umbrella, it goes over you. You could have you, and you could pull your kid in there, and it could go over the both of you. The nature of an umbrella is to go over other policies. So you're going to need to have certain limits of your liability on the underlying policies to qualify for an umbrella. A traditional personal liability umbrella policy is going to go over your primary home, whether you rent it or you own it, your primary cars, and then if you have only a few rental properties, any rental properties that you have that are in your personal name. And some carriers have caught up with the times, and they will let you include properties that you own in an LLC if they're a mom and pop LLC set up for the purpose of owning real estate. And they've also, some carriers have expanded that a few rental properties being personal and not commercial up to 16 or 20 properties, which is really nice. So same thing back to the general liability insurance. When I say, here liability, think lawyer. Right. The more assets somebody has, the more likely is that they should consider.
So let's go back to the umbrella. The umbrella is to protect me against personal liability. It has nothing to do with protecting the destruction of the things that live under the umbrella.
Correct. That is exactly correct. It's all for lawsuits.
Good.
And you can get an excess liability policy, a commercial umbrella, you'll hear it called, on the commercial side as well. And same thing, if you're a business that's doing $50 million a year in revenue, you probably need more than $1 million of general liability insurance, which is the standard. And that's when we get into the excess policies. And we'll see 5, 10, 20, 25,000, or 25,000, 25 million for some of the big contracts that folks are required to have.
In Florida specifically, homeowners insurance has become a nightmare, maybe an understatement.
It's not great.
I know I've had customers on the inspection side and agents I deal with, and I know you've had probably thousands of these conversations as a company where, hey, my homeowners insurance was $1,500 last year, and now it's gone to, the worst I've heard was $1,300 to $5,800. I'm sure you've got stories.
That's pretty close to our worst one on a single policy.
Could be it was a mutual customer. We won't discuss that. But it's crazy. Here's what we know to be true.
Okay.
Insurance companies need to be financially viable, or they can't pay.
Correct.
Homeowners need to be able to afford the policy, or they need to have a less expensive home. And the legislature, it feels like, is attempting to balance those things in the middle. I've read reports or stories that have said on the path that we're on, in less than 36 months, there will be no insurers, private insurers in the state of Florida, and all of that risk will live with citizens which really means the citizens of Florida. We're on the brink of
terrifying.
insolvency.
It is a far bigger problem than people realize.
So let's talk about how we got here.
All right.
I'll throw out how I think we got here so that
Okay.
that's a point from which to deviate, and then you can fix it. I've watched this for 25 years now, professionally, and then prior to that as a homeowner, but professionally for 25 years. It feels like about every 5 to 10 years we come to a crisis, and the legislature makes an effort to solve the crisis. And as each person weighs in, from the home builders, the real estate agents, the insurance industry, the lenders, the building code officials, and probably another half a dozen unnamed groups, we create a sausage that no one thinks is very good, but everyone, well, if that's the best we can do, we'll sign off on it. And then from that, somebody figures out how to game it. Specifically, where I'm going on this is the well-intended assignment of benefit. For the uninitiated, what is assignment of benefit? What was the good it was intended to do? And how has it gone so sideways?
So the intention behind the most honest and well-meaning application of an assignment of benefits, it's a document that a contractor would use, that they would have a Florida homeowner policyholder sign, and in the best case of scenarios, in the most favorable light, it allows them to coordinate with the insurance company on behalf of their client.
No out-of-pocket expense to the
That's
individual
how they
homeowner.
set it
That
up,
was
yeah.
that was the intention, so that a person, regardless of their personal resource, if they had a calamity, a destruction of their home, they would not need any out-of-pocket to get made whole. How did such a nice idea go so sideways?
So I've been doing webinars on the rate increases. I don't know if you've caught one yet, but I've been talking a lot about the Cobra effect. Have you heard of the Cobra effect?
Please share.
All right. So the Cobra effect is an anecdotal story about when India was under British rule and they had a Cobra crisis. Like you said, one of these things that come along every 5 to 10 years. They had crazy cobras, too many cobras everywhere. So they put out a bounty on cobras. People would bring in the dead cobra. They would give them some money, and it was working great. The cobra problem was going down, until some very crafty people started breeding cobras. And so now you have cobra farmers and more cobras than ever. So just like you said, it's a well-intentioned measure that has inadvertently resulted in an opposite.
My one-liner for that would be, no good deed goes unpunished.
I mean, it's really, if you've got, I think we got a little time, so I would like to give you the full backstory on this specific. All right.
Nothing but time, man.
All right, so here goes how the Cobra effect happened in Florida. We have 2 court cases. Again, very well-meaning, both of them, the spirit behind them to stand up for the Florida homeowner and hold the, air quotes for the podcast, the big bad insurance company, who, by the way, that's not been my experience in selling insurance to my clients. Most of my clients truly do have
Insurers
great claims
want to
experiences.
pay claims. Insurers do not want to be abused.
And pay what they don't owe.
Exactly.
And when insurers pay claims that they don't owe, best case scenario is that the rates go up for everybody else, which is unfair. Worst case scenario is they go out of business, leave the state, we have fewer options.
Right.
In any industry, fewer options is bad for the consumer.
Agreed.
So we have court case number 1, which was the Sebo case, S-E-B-O. Jeff Sebo was a homeowner in Naples, Florida. He had an $8 million home that when he bought it, and I'm shortening this, okay? I'm paraphrasing some things.
Take your time.
The house leaked. The house leaked. Every time it rained, the house leaked. It's you see this when you inspect homes,
Sure we
right?
do.
So prior to this case, we had what they measured cases against over whether insurance companies should pay or not. It was called the efficient cause doctrine. And it said that if the first thing that happens, when multiple things happen to a property, if the first thing that happens is covered by insurance, even if the later things that happened are not, the insurance company has to pay the whole thing. An example we see a lot, if explosion is excluded but fire is covered, and if fire causes an explosion, insurance company pays.
So if your meth lab blows up.
I don't know, that one I've actually taken a CE course on that, but that's another story. So what happened with Jeff Sebo is Hurricane Wilma came through. and it leaked a lot because a hurricane came through. The insurance company, they actually did pay about $50,000 for the mold damage, but they denied the water damage claim because they said your house didn't leak because of the hurricane. Your house leaked because it had already been leaking because of the construction of the house. So Jeff Sebo hired attorneys years later, sued everybody. And it wasn't until years after that, after he'd already been suing everybody, that he added the insurance company to the, I think it was 2009, he added the insurance company to the lawsuit. So it went back and forth and back and forth. They sided with the Florida homeowner, Jeff Sebo. They sided with the insurance company, appealed back and forth. And at the end of it, in 2016, they paid Sebo. So when they paid Sebo in 2016...
Who paid? The insurer?
The insurer paid. The court sided with him, and they said this insurance company has to pay him. So what they did in this well-meaning, pay the Florida homeowner measure is they've now set a new standard called the concurrent cause doctrine. So now what we have is if two things happen at about the same time, one thing covered by insurance, one thing not, insurance companies lose in Florida court.
Mm-hmm.
Even if by policy contract language, so the elephant in the room, what we're talking about here, and I'm so sorry to my clients that are roofers, this is polarizing, but I've got a whole book of business of policyholders whose rates are doubling because of this issue. So the Florida homeowners insurance policy states that it's supposed to pay for roof replacement if more than 25% of the roof is damaged by a covered peril.
Yep.
Because we have this concurrent cause doctrine, we can have one shingle damaged by wind or a covered peril, and the rest of the roof damaged by an uncovered peril, i.e. wear and tear.
And as long as we hit the 25%, roof coming regardless of age or other issues.
And we lose in court.
Yeah.
And every free roof, the cost of a free roof, it's the consumer that pays for this. Yeah. So we've got a scenario. It's the system that is broken. I really don't hold these roofers. It surprises a lot of people because it's the system that's broken. Mm-hmm. They are maximizing the system the way that it is set up to be to their company's advantage.
I read an article over the last few weeks that something in excess of 90% of all insurance dollars paid toward roofing are litigation dollars.
That's case number 2.
Go ahead.
There we go. So then bring in the next case, which was the Joyce case. So we've already got a system where it's incredibly easy to sue insurance companies for a free roof and win. And then we have the Joyce case, which was actually a St. Augustine couple. It was a relatively small claim. It was under $10,000, water damage claim. They filed. Again, I'm shortening it. The insurance company determined that they had previous claims that if they had known about those, the client wouldn't have been eligible for insurance in the first place, so they denied the claim for material misrepresentation. It was an elderly couple, compelling claimant. They called around. They hired an attorney who felt that this case was just unique enough that it was going to take her a lot of time, and she only accepted the case banking on the fact that she was going to be able to charge a fee multiplier, which is when an attorney charges many times over their regular hourly rate because a case is rare and unusual. Again, there's a great well-meaning behind this.
It was intended to protect the Joyces.
It was intended to have attorneys take on very important cases that might be open for years that they would never collect on, saying that, all right, if you take 3 of these, probably 2 you're going to work for free on all this time. So that third one, we're going to reward you and pay you triple your hourly rate because you took on this case that was open for 10 years and it finally closed all this time. So in the Joyce case, the attorney fees were over $76,000.
On a $10,000 problem.
So once again, it went back and forth where they said, insurance company, no, you don't have to pay this. This is ridiculous. And then they appeal and they say, oh, well, she did work really hard. So at the end of the day, the Florida courts said, insurance company, you do need to pay this attorney. She worked really hard. And that set a new precedent that now fee multipliers can be applied for attorneys suing property insurance companies. And that was the big Pandora's box. So we've got Sebo that says it's easy, and now the Joyce case that says that it's incredibly lucrative and easy. So if you see the numbers, Florida property insurance market, 5 years in a row of consecutive multi-million-dollar losses. In 2020, they lost over $1 billion. No storms in 2020 in Florida. okay? But what did happen in 2020 is it was the last year to file a claim for Irma, and everybody was home because of COVID to answer the door-knocking roofers.
Yeah.
And you see it by the numbers. I mean, it just gives me chill bumps because I take it especially personally because I opened my agency Scratch 6 years ago. So majority of the business we've written has revolved around a real estate transaction. The majority of those cases involved the seller putting on a new roof in order to sell the property.
Yep.
So I've got all these clients who are not getting free roofs, who are subsidizing everyone else. And again, it's not even the other people's free roofs. It's all the legal fees. And that article, it was in the Jacksonville paper last week. It was sickening.
Yes.
The amount, yeah.
You know, a place, well, we have a lot of places in common and crossover, but you mentioned real estate transaction. I cannot tell you the number of times in the last 6 months to a year where we've had an inspector go out, do a building inspection, look at the roof and say, this roof is 15 years old. It's functioning perfectly well. It has never been repaired. We used infrared. We did every imaginable piece of technology. It is not leaking. It has never leaked. And based on our experience, this roof has at least 5 more years of life on it. And make believe God looked down and said, you know what? You're correct in that. The people got insurance somehow, homeowners insurance, legitimately, moved in, and then within 30 to 90 days got a letter from an insurer and said, we're no longer insuring roofs that are more than 10 years old or 15 years old. Well, and I cannot tell you the amount of hate that has caused. How do we solve that?
So the thing that's terrible is the insurance company is not managing the risk of actually something happening to the roof. They're managing the risk of being on the clock until a door-knocking roofer comes by because it's lucrative and easy for them and their attorneys to get together. Would you believe that starting tomorrow, one of the only AM Best A-rated carriers that's still writing business in Florida is in Duval County not taking any new business for roofs, ready, that have been put on prior to 2016.
5-year-old roof. That is frightening.
This is, I know.
I was having such a good day.
I know. And here we're sitting and we're like,
I've watched that ratchet down. First it was 25 years, then it was 20 years, then it was 15 years. Commonly now I'm hearing 10 years. This is like breaking news on 5 years.
So let's get into what can fix it. Let's get in. So this, I'm
so
wildly
the legislature
optimistic.
is presently in session.
Yep, it's Senate Bill 76.
Yep.
I'm very optimistic about it.
The key points are?
There's 4 of them. Start with the one that is unpopular because this is a great segue into it. The piece that's gotten a lot of the clickbait
proration
is that that it wants to give insurance companies the opportunity to include in their policy contract. They're not putting the wool over anybody's eyes. It will be, you can buy this policy or you cannot, but it will allow them to settle claims on roofs that are older than 10 years old on an actual cash value basis. And I'm telling you, when I've had a one-on-one conversation like this, 100% of policyholders that I talk to think that that's very fair. Well, that's fair.
You know what fascinates me, Whitney, is, and I've watched some people spew venom at the pushback of the idea of proration in every other aspect. Your auto. So if you bought a brand new Lexus in 2021 and you drove it for 10 years and you had a peril, they don't say, well, let's get you a new one. No, it's cash value. It's prorated. I do not understand why there's such pushback.
Well, and the thing of it is we have been culturally conditioned, especially up here in our market, to expect and anticipate that replacing a roof is no longer something that's thought of as a homeowner's maintenance thing. It's something that's thought of as
That's not the only thing that's said.
Right? But it's thought of as like
I'm
a warranty.
in pain. There must be someone responsible.
It's bad. But if you rewind the clock, I mean, replacing the roof on your home as it wears out is no different than replacing the tires on your car.
Exactly correct.
It's something that a homeowner should be setting money aside for. And if a storm does come through and a tree falls on your roof or it blows 50 shingles off of, and hey, and I want to be clear, I had a roof that was destroyed in Irma. It blew shingles off of the whole roof.
As did I.
had an insurance. Okay, so that's legit. I'm entitled to that roof. It's the one when all the shingles are there and it's just old.
Yeah.
That's the one that, so that's the piece that people have gotten a lot of, will get worked up on, because it's being perceived as a way for insurance companies to pay less than people feel entitled to that they would have previously been owed. But the thing that they need to go back to, the conversation where we were 90 seconds ago, you're losing options. So
Yes.
if you're forced, you only have 3 companies that are going to write your policy, and they're all $2,000 more than maybe a carrier would have
If my
charged.
homeowner's insurance went from $1,000 to $4,000, that's a $3,000 spread. That means I could take
Buy
that
your
savings
own roof.
and buy a new
You're
roof every
right,
5
I know.
years.
And that's the thing. That's the thing. And the shame of it is, again, you saw that article in the paper. That difference, I mean, we love to say like, oh, it's going to pay for everybody else's everybody else's new roof. But the actual roof part is only a small part of it.
Yeah.
It's all, the litigation. So that's what the other
So
pieces
four,
are.
four key pieces.
4 key pieces. So we've got
Proration
one-
is one. Number 2.
The other one is the very obvious common sense. Get rid of the fee multiplier.
Okay.
I mean, every other state has closed this loophole. It's ridiculous that we have this in Florida. Let's have fee multipliers only
So
be
attorneys, not
Attorneys.
eliminating the attorneys, but capping.
that they are only allowed to charge a typical hourly rate for suing insurance companies for property insurance claims. I mean, there's certainly no shortage of them, so there is nothing that is rare and unusual, which is what a fee multiplier is appropriately used for. So to really bring back that fee multipliers are for only real, rare and unusual cases.
Right.
The other thing, and this had great success in Florida with AOB reform, and in Texas they had a similar bill where they changed from the one-way attorney fee to a sliding scale. In Texas, they passed 2018, I think. Don't quote me to that, but they passed a similar bill, and it immediately reduced lawsuits 80
Explain
to 85%.
that one to me. I'm not quite understanding.
Okay, so as it stands currently, you have an insurance claim, the insurance company offers you $10,000. You get an attorney, and the attorney is like, no, they should be paying you $50,000. You should be getting a whole new kitchen out of this. And you go to court, and the court's like, okay, you're ridiculous. You don't get a whole new kitchen. But we do think that maybe they should cover like that other room also. Maybe they should pay $12,000. If the final settlement is even $1 more than the original amount that the insurance company offered, the insurance company has to pay for all the attorney fees, and that includes the fee multipliers.
Got it.
So the sliding scale says, all right, if the insurance company is way off, then yeah, they still have to pay all the attorney fees. But if they're only a little bit off,
So there's
then
an
they only pay a
incremental
portion.
expense to account for the incremental improvement. That seems fair.
It makes it less lucrative.
What's the third one? So we have proration, the fee multiplier management. What's
The
number
third
3?
one is the sliding scale,
Oh,
to go from the
sliding
one-way
scale.
attorneys to the sliding scale. And then the last one is another common sense. In Florida, we have this weird statute of you have 5 years that you can turn in an insurance claim if it's not a hurricane, or 3 years to turn in an insurance claim if it's related to a hurricane. And that's just way longer than other states. Texas, Louisiana, Florida, they've got
If
one
you
in
didn't
2
know you had a
years.
roof leak,
That's the thing.
specifically, or a
right,
flood.
Right. I mean, and you look at the numbers, and this is where, I feel passionate about this because I care about my clients, and I really try and be very clinical when I talk about it. Because when you look at the numbers and you see that in 2017, in the year of Irma, less than 10% of policyholders had an attorney when they filed their first claim. But in 2020, 65% of them had an attorney before they even said, hello, insurance company, I would like to file
Power
a
of
claim.
advertising.
That's the thing. And we're 3 years later, and we see where the money's going.
And the proposal presently in front of the Florida legislature is reduce that filing limit to
To a standard 2 years.
2 years. That seems more than fair.
It is.
I would have opted
It
for
is.
1 year.
It is. And
It's the outliers that cost us so much money. And the idea that we can craft something that will protect every imaginable scenario, we burn a lot of money.
And that's the thing. Carriers are leaving. I mean, we just had, I hate to be all doomsday, but
You're not
we
doomsday.
just had.
We're preparing people through understanding to put themselves in the best position to be
Right.
protected, and give them understanding. So when they have a conversation with their legislature, say, yes, this is how I feel, this is why I feel that way, rather than just, I'm angry that my rate's so high.
Yeah.
That doesn't help in judgment.
And the thing, we're sending emails, we're calling all the time, we're telling our policyholders, we're also, asking around, because I've learned in my dipping a toe into talking about politics in a public setting, that, not all voices are heard at the same level. So we're asking around our clients that, carry more weight and calling in favors and asking, who can you talk to? Who do you know? Whose ear do you have? Because the big problem with this is arguably the trial attorney lobby has more influence in our Florida legislative system than any other interest. I mean, Florida homeowners just don't have a big, loud voice.
Well, it's honest to say the vast majority of legislatures at every level, whether it's city, state, or federal, are in fact attorneys. So they're empathetic, and we're not anti-attorney. We're just not.
Depends how many attorneys sue my clients
individually.
in a day. Some days, and I've got a lot of them in my family, and I love those ones. Yeah. And there are some good ones, but boy, I tell you, some days I just.
So there is an ad I hear often on the radio. I see it on TV also now that I think about it. That was your home built before 1975? If you got cast iron pipe, if you've been told you need new pipe. That's
the next thing.
How is it? And I could tell you who it is. You know who it is also, and everyone listening knows who that insurance group, attorney group is, and that's all fine. How has a 50-year-old pipe become an insurance claim?
Cobra effect, Wally.
It's just mind-boggling.
We get one. If they can get one case, if they can make an insurance company pay one case,
apparently
it's gray enough, it sets a precedent.
I should have John Morgan in here and ask, how in the world did you do that, sir? It's remarkable.
It's a lot of.
And that individual homeowner is immensely grateful.
That individual homeowner is. And then you know what happened last week? I had to send over to a client of ours that we work with all the time. The insurance company that we work with regularly has now added these questions about what is the material for the drain line?
Yeah.
What are and now we're already in a situation where inventory is slim.
Mm-hmm.
We're already in a situation where carriers are already leaving. The underwriting is getting stricter and stricter and stricter. So, some of the measures of this bill, doing away with the fee multipliers, doing away with the one-way attorney fee. If a homeowner has at least some skin in the game, that if they sue their insurance company and they're just, totally wrong, that they would be responsible for paying their lawyer. Imagine, right? Imagine if it was set up,
Yeah, I'm not sure I'm going to advocate for that, but at the same time, that would solve it instantly.
So here's the thing that makes
a lot of people would be harmed in the mix.
Well, the thing that makes me the most optimistic about how quickly I think that this bill can help course correct. Now, don't get me wrong. I mean, to me, 2 years is a swift course correction. I think that would be like a very quick. We're not talking it passes and in 6 months, like premiums are back to what they were in 2015. Like that's not happening. But
we've got to stop the bleeding before we get the healing.
Exactly. But when you look back at other, you brought it up earlier. Every 5 to 10 years, we seem to have some sort of crisis. Do you remember sinkholes?
I do.
So the main issue with sinkholes, those were a whole other batch of Cobra farmers who realized that the way that sinkholes were defined in insurance policy contracts, it put the burden on the insurance company to prove that there wasn't a sinkhole or any ground
You cannot
moving.
prove a negative.
And so, therefore, insurance companies were forced to pay all these total loss claims on homes that weren't even damaged just because they couldn't prove that there wasn't a sinkhole at the location. So what did they do? At a higher level, they redefined how insurance companies protect Florida homeowners from the ground opening up and swallowing up their house, what people are actually concerned about. So they redefined it as catastrophic ground collapse coverage. So we get questions, now you're going to notice it on every homeowner's insurance policy contract that you see, but it says, I reject sinkhole coverage, I instead select catastrophic ground collapse coverage. And what that did is it shifted the burden of proving that that a sinkhole exists from the insurance company at just mentioning that I think that there might be a sinkhole to the policyholder until a few criteria are met. One of them being the very common sense, your home must be damaged before you could, among other things. But I mean, it is that, that simple of a thing. And guess what it did? Nobody's
gone
suing
away.
insurance
Yeah.
companies for sinkholes anymore. And guess what? Nobody's houses are getting swallowed up and they're getting screwed over by the insurance companies because of this change. You know, the system was broken, the system got fixed, and it worked.
Yeah.
So that's what makes me, look, it's totally common sense to get rid of the fee multiplier, totally common sense to get rid of that sliding scale, totally common sense to get rid of the statute of limitations for when to file claims. The main people, like you saw the numbers, 90 to 95% of the money that goes to benefit those things are right into the lawyer's pockets. It is not for Florida homeowners. The first one, the fourth one that we
proration.
The proration of the roof. There are going to be Florida homeowners who are going to get claims that are paid out a few $1,000s less than they would be paid out right now. But I would bet you lunch that the stability of our real estate market and our insurance market that is adjacent and very intertwined with that they will long-term, the savings and the benefit to them, even the ones that have that claim, will be far greater by fixing the system than the increased premiums. And
I would like to see the mortgage people weigh in on this, because at some point in time, as our insurance premiums approach our mortgage payment, the mortgage is at risk.
It is, and we're seeing on the buying side, it's the first-time home buyers whose debt to income is already so tight, and they've got, their well-meaning mortgage broker has put $1,500 as an estimate for what they think insurance is going to cost, because they probably saw that 6 months ago on the exact same house, and then it comes in and, the roof is 17 years old, or whatever curveball
if we stay on the path that we're on, Whitney, you know how in a real estate transaction the appraisal is often everything was good except it didn't appraise. The insurance is going to be there very soon.
We're there.
Contingent on.
We're there. And so that's the thing. Our agency, what we're trying to, one of our core values and on our team is to always be looking for ways to add value. So I didn't create this situation, but this is the industry that I'm in. These are the cards that I've been dealt. How are we going to play them? So we've really been leaning into how can we help our buyers' agents, our real estate agents that work with buyers, prepare them for the new normal.
Right.
The new normal is that there is such limited inventory that you need to, they can weigh into the piece about how high or low or whatever you need to go in with your offer and what, clauses you need to include in the offer. But in coaching the buyers that the new normal is you probably are going to also need to have some money set aside to get the home up to insurance standards. Yeah. Because the days of going back and having the seller fix it, the seller's like, get out of here, I got 15 more offers.
I've encouraged agents to shop insurance at least as early as they're shopping the mortgage, because so many people are looking at a particular neighborhood or a particular class of home. So the issues that are going to come up with that house typically are happening everywhere in the neighborhood. Just to give you a call and say, hey Whitney, I'm looking at this particular neighborhood in Arlington. What am I looking at insurance wise? With a
Right. So to that end, we created actually a nice little one-pager. It's a home buyer's checklist, and it says on there, this is not intended to replace a 4-point. This is not an inspection. But as they're looking at things where there's a little spot to jot down information on the roof, how old is the hot water heater, like those little things.
Polybutylene pipe, aluminum wire.
The curveballs to look for, so that when they're looking, they can if they look at 4 houses that they like, they can see, okay, these are the ones that the insurance is probably going to be a little bit more, and be able to factor that in. And if when we post this, I can put a link if people we made the flyer so it can be co-branded for buyer's agents. So if that's something that would be helpful for them.
I'm sure that gets in the show notes for you too. That's good. That'll be helpful for all. So what have I not asked you that you have been dying to share with us to assure that word got out?
Well, that's the biggest and most important thing.
I did pretty good then.
You did. But I do want to end it. There has been a few really nice bright spots that have come out of the crazy in the commercial space. Because I do want to circle back to the fun stuff, because boy, the people have gotten real creative being home this last year over COVID, and we're seeing a lot of buildings being used for other things. We're seeing a lot of investors that traditionally were in the residential only space, and now they're getting into the commercial space, and that's really been a lot of fun. We're seeing a lot of properties in our downtown area get revitalized and be made nice again, and that's going to be good for all of our property values. And so
Good.
We got to have me going out. I'm the fun one, okay? I'm in here all doomsday.
As insurance agents go, yes,
as
you are.
insurance agents go.
So, Whitney, for people who'd like to extend the conversation or bring specifics to you, what is the website to get a hold of you?
RicciInsuranceGroup.com. That's RICCI, insurancegroup.com. We're also Ricci Insurance Group on all social media if you want to go on to follow us there. And we have been doing, I've done a condensed version with PowerPoint slide of this webinar about the Senate bill and about the premium rate increases. I've done it about 5 times.
So a real estate company or an investor group or whomever that wanted that individual attention, you're more than happy to bring that presentation out, educate them, take those questions.
We can get them set up for that. And then also, like I said, really buyer's agents, we're wanting to help them walk their buyers through the new normal, because just like you said, you could go out and they think, look, I just had a house that sold last month with a 15-year-old roof and they got insurance just fine, but what they're not seeing is the back end after it goes through the stuff you and I are
that
seeing.
causes such pain.
So, yeah.
Pain to the home buyer, home to the agent, pain to us.
I know.
Oh, I hate that call.
I know. But Wally, do you see how this will fix your situation? The carriers aren't going to have to hop off the clock.
This
if
will
they're
improve
on an
it.
ACV.
This will improve it.
It really, with if it's not so lucrative and so easy for them to get forced to pay claims that they shouldn't be paying, we can all get back to a little more normal.
A new normal. Thank you so much for spending the time with us.
Thanks for having me.
Enjoyed it tremendously.
Thank you. Me too.
All righty, sir. If you're listening behind the door, we're all done. I'm hitting the unrecord button. That was great. You comfy?
I'm good.
Did we represent the cause reasonably well?
We did.
You were
Sorry to
enthralled?
interrupt. We're going to have to cut the beginning, the first 30 seconds over, because you saw me your third minute and a half, or whatever it was, when I came in, when we switched her, and I apologize for this. When we switched her,
You
I didn't
boned up
switch.
again?
Huh?
Every week there's some new mistake.
No, we
I'm
just
teasing.
we didn't have her microphone. We had the other microphone up. We didn't have 3 up because we moved her over here. I was thinking 1 and 2. I caught it, so most of the conversation's fine. It's just first, yours fine. Her point is I can bring her up a little, but I won't be able to hear her that much.
Don't even worry about it.
You sure?
Yeah.
Just her introduction.
It'll pass right through. Oh, just the introduction?
Yeah, just your introduction that kind of talked about who she is. If you
Okay.
And I'll re-edit it all in. Or
So I'm confused. So if I start,
If you say, hi, Wally, I'm Wally Conway, like you always
okay, I do the introduction.
and introduce her again, just do that introduction portion, and I'll edit together, because I won't hear her that well.
But she didn't talk to her in the introduction. I'm just trying
Just
to.
after her that. Remember when I came in, you guys were just starting to chat between each other, so
Yeah.
maybe how you introduced her at the beginning, I can probably play it back for us so we can hear it.
Yeah, let
Okay.
me, because I'm not clear on what you
sorry.
need.
Yeah, I'm on hold with somebody. Yeah, and I apologize for that. Yeah, I did. I've been hold for an hour here. Seems like. Yeah, here, let me do this, Wally. That's perfect. Enjoy your.
Distributing that. So commercial
What a warm welcome.
for this.
Or a business owner who owns the building that they're
Sure that when that thing that I know will never happen to me happens to me, that I'm reasonably protected. So talk to me to get us going on about general liability insurance. What does that protect me against?
Okay, so any
Brandon giving it a pause so he can find out when we started.
the countdown, the drum roll. Stuff. The attorneys tend to identify the failure to maintain.
So in terms of risk,
parking lot type of thing. So when we're talking about commercial real